What if I told you that Tata Motors plans to invest nearly 40,000 crore rupees over the next 5 years? Not 4,000 crore rupees, not 10,000 crore rupees, a massive 40,000 crore rupee investment. And the goal is equally ambitious. The company wants to more than double its passenger vehicle sales, capture 20% of India's passenger vehicle market, expand its electric vehicle leadership, and launch multiple new models by FY31. But can Tata Motors really achieve these targets? What exactly is the company's growth strategy? Why is it betting so heavily on electric vehicles? And what could this mean for investors, customers, competitors, and India's automobile industry? Let's break down Tata Motors' ambitious FY31 roadmap. The big announcement. Tata Motors Passenger Vehicles has unveiled one of its most ambitious growth plans in recent years. The company plans to invest between 37,500 crore rupees and 40,000 crore rupees by FY31. This investment will be used to expand manufacturing capacity, launch new vehicle models, strengthen electric vehicle offerings, enhance battery technology, improve charging capabilities, increase market share. The announcement signals Tata Motors' intention to remain a dominant player in India's rapidly evolving automobile sector. What is the company targeting? The targets are significant. By FY31, Tata Motors aims to increase annual passenger vehicle sales to more than 1.2 million units, achieve approximately 20% market share in India's passenger vehicle market, expand annual production capacity to around 1.3 million units, generate revenue of approximately 1.4 lakh rupees crore, achieve an EBITDA margin of around 10%. These are aggressive targets and represent a major expansion from current levels. Why does Tata Motors believe this is possible? According to the company, several factors are expected to support growth. First, rising incomes across India. As household incomes increase, more consumers are expected to enter the passenger vehicle market. Second, faster replacement cycles. Consumers are increasingly replacing vehicles sooner than before. Third, growing demand for premium vehicles. Indian buyers are increasingly looking for feature-rich and technologically advanced cars. As a result, Tata Motors expects the average selling price of vehicles to rise substantially by FY31. The electric vehicle strategy. One of the most important aspects of Tata Motors' plan is electric vehicles. The company currently leads India's electric passenger vehicle market. It has already sold hundreds of thousands of electric vehicles and continues to expand its presence. Looking ahead, Tata Motors believes that electric vehicles will contribute significantly to future growth. The company expects EV penetration in its portfolio to exceed 30% by FY31. To support this objective, Tata Motors plans to expand its EV lineup from the current range to approximately 10 electric models. This indicates that the company sees electric mobility as a core pillar of future growth rather than a niche segment. New products on the way. To achieve its targets, Tata Motors plans to launch multiple new products. The company intends to add 6 new nameplates to its portfolio. This expansion will increase consumer choice and allow Tata Motors to compete across more vehicle categories. The company is also focusing on new generation electric vehicles, including products based on advanced EV platforms. The objective is simple: more products, more customer segments, more market share. Technology will play a key role. Tata Motors is not just investing in vehicles, it is investing heavily in technology. The roadmap includes larger battery packs, improved energy density, faster charging solutions, enhanced powertrain technologies. Better driving range. The company also intends to address major concerns that continue to affect EV adoption, including charging infrastructure, ownership confidence, and real-world vehicle performance. These improvements could play a crucial role in increasing consumer acceptance of electric vehicles. The competition challenge. However, achieving these goals will not be easy. Competition in India's passenger vehicle market is intensifying. Major domestic and international automobile manufacturers are investing heavily in both traditional and electric vehicles. Companies are launching new products at an unprecedented pace. Therefore, Tata Motors will need to execute its strategy effectively while maintaining product quality, pricing competitiveness, and customer satisfaction. The next 5 years could determine whether the company successfully transforms itself into a significantly larger passenger vehicle manufacturer. What does this mean for investors? For investors, this announcement represents a long-term growth story. The company is making substantial capital investments today with the expectation of higher sales, stronger market share, and improved profitability in the future. However, large investments also carry execution risks. Success will depend on market demand, consumer preferences, EV adoption rates, technology development, competitive positioning, and overall economic growth. Therefore, investors will closely monitor how effectively Tata Motors converts these investments into sustainable growth. Key takeaways. Tata Motors plans to invest up to 40,000 crore rupees by FY31. The company aims to double passenger vehicle sales to more than 1.2 million units. It is targeting a 20% share of India's passenger vehicle market. Electric vehicles are expected to play a major role in future growth. The company plans multiple new product launches, expanded production capacity, and significant technological upgrades. If executed successfully, this could become one of the most significant growth stories in India's automobile industry over the next decade. Conclusion. Tata Motors is making a bold statement about the future. The company is not preparing for incremental growth. It is preparing for transformation. The question now is whether this massive investment can translate into stronger sales, greater market share, and leadership in India's rapidly growing electric vehicle ecosystem. The next 5 years will provide the answer. Disclaimer. Viewing this video or accessing the content on this channel are free and does not create any professional, advisory, or client relationship between the speaker and the viewer. The content is shared solely for general, educational, and informational purposes. The speaker is a member of the Institute of Company Secretaries of India, ICSI. However, the information provided in this video should not be construed as professional advice, consultancy, or opinion under any law or regulation. Viewers should not rely solely on the information provided in this video for making legal, financial, regulatory, or compliance decisions. Any person intending to rely upon or act on the information contained herein should independently verify the relevant provisions of law and, where appropriate, seek professional advice from a qualified professional. The speaker, the Institute of Company Secretaries of India, ICSI, and any organization or listed company with which the speaker may be associated shall not be liable for any direct or indirect loss, damage, or consequences arising from reliance on the information provided in this video or channel. The content shared on this channel is based solely on publicly available information, general legal provisions, and academic discussion of corporate and regulatory frameworks. The speaker confirms that no unpublished price-sensitive information, UPSI, confidential information, or proprietary information of any listed company or organization has been disclosed or discussed in any video or content on this channel. The views expressed in the videos are personal academic interpretations for educational purposes only and are not connected with or derived from any confidential information obtained through employment, professional engagement, or association with any listed company or organization has been disclosed. Nothing contained in this channel should be interpreted as market advice, investment advice, or insider information under the applicable provisions of securities laws, including the SEBI Prohibition of Insider Trading Regulations 2015. Viewers are advised that the information shared is purely for general educational awareness and should not be relied upon for investment decisions, trading decisions, or regulatory compliance without consulting appropriate professionals and official sources.